Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, October 20th, 2020, and we again find ourselves in the final hour of the trading day. The final hour of the trading day is the most important hour for me. I like to make my buying and selling decisions for my swing trades based upon what the large financial institutions are doing with the price in the last hour, and in particularly in the last few minutes. The day traders and the algorithms, they are the ones that are in control of the price during the day. At the end of the day, you'll a lot of times, oftentimes you'll see the price move sharply up or down, and that's the large financial institutions coming in, taking control and moving the price where they think it is the most valid price. And I do think that's the most valid price to make your buying and selling decisions from. So that is why I do that. I think there is an edge in it. So anyway, thank you all for coming today. It's always nice to see everybody. I am very grateful that we have such a great group, such a great community, and thanks for coming each day, investing your time, and I hope it's helping with your trading and your investing. So, big day today. Dow Jones is up 260 points, up 0.92%. The NASDAQ is up 109 points, up 0.95%, and the S&P looks like it's the strong one here, up 35 points, up 1.04%. So, nice to have after yesterday's big down move. So here's the plan for today. First of all, as always, we're going to run the U.S. legal disclaimer. Secondly, I'm going to come back. I'm going to take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage it going forward. I have had some really good day trades today. So the streak continues. I will share those with you. And then we're going to go over to the board and take a look at your positions. I see a lot of green over here. So that's going to be great going through those and taking a look at those. After that, we're going to talk about trader psychology, most important skill that you can learn, develop, hone in trading. Two things to trading. You have to have a strategy, and number two, you have to follow the strategy. That's what it's all about. And if you can't follow that strategy, you really probably shouldn't be trading. And that all comes down to trading psychology. So I do like to spend a few minutes and talk about that. After that, I have gone down through my watch list. I have gone down through the results of Kamal Scanner. I have 3 requirements whenever I'm looking to enter a trade. First requirement, looking for a confluence combination of indicators lining up on multiple time frames. It's very important. Indicators, triggers, to me, they are groups of buyers, potential groups of buyers coming in, and you'll put yourself in the best position to have a profitable trade if you're in the company with as many other buyers as possible. So if you would look for confluence and combination of signals on multiple time frames, that's how I attempt to put myself in the position where I'm in with a lot of other buyers. Number 2, you have to have a good risk to reward ratio. Very, very important, extremely important. 2 to 1 is the minimum, 3 to 1, 4 to 1 is better, but you need to find good, solid support below you. Take your trade. If you're wrong, get out quickly with a small loss. If you're right, have 2, 3, 4 times the potential to the upside as you do to the downside. And with that approach, you don't even have to win 50% of the time. You can lose more than 50% of the time and still make money because you're making more on the trades that you have winners in, and you're losing less on your losing trades. And then number 3, always please take a few minutes, consider how much account heat do I have? How much of my actual capital do I have at risk? How many positions do I have? How correlated are the positions? Do I have something outside of equity, such as gold, bonds, silver, oil, something like that? In an ideal world, all my trades would be completely uncorrelated and all my trading setups would be completely uncorrelated and using multiple time frames. So those are the 3 requirements. I'm going to go through the list of candidates. Take a look. We'll go through each one. Something looks good, we'll put it over in the looks good pile. If something doesn't look good, we'll just get rid of it. And then at the end of the day, I will go through the looks good pile with a fine-tooth comb, multiple time frames, risk to reward, confluence of indicators, all that kind of stuff. And we'll see if I can find something good at the end of the day that I'll take right before the market closes. After the market closes, if anybody has any questions for me, please let me know. If you have any stock symbols that you'd like my opinion on before the market closes, happy to take a look at that for you. Put it in the chat, put an asterisk by it so that I know it's time sensitive. And then lastly, if you have any new entries or exits today at the end of the day, if you could just be so kind to let me, to wait for the market to close before you tell me what they are. That way I have plenty of time to do my trading, teaching, get my new positions or get out of positions, and then the pressure's off and we'll spend all the time that we need to do that. Okay, so that's the plan. Hang tight. I'm going to run that U.S. legal disclaimer and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, looks like Kamal is here. Hey, bud. Good chatting with you today as always. Kamal's like my trading partner. We trade notes, take a look at different trades and point things out. So I appreciate that, Kamal, and appreciate the results of your scanner as always. Tracy Peterson, good afternoon, Greg and the Gosseteers. Hey, Tracy, I got your email and I will definitely reply to that, but I appreciate that. Thank you for sending me that. And good to see you. And please say hello to Paxton if he's around. Gary is here. Hello, Greg and group. Hi, Gary. Good to see you, bud. Miko is here. Good afternoon, Greg and all. Hello, Miko. Good to see you, my friend, as always. Evan says good afternoon. Hey, Evan. Good to see you. Dan says, Tracy reminds me of Mickey Mouse Club. Today is Tuesday. You know what that means. So we're going to have a special guest. LOL, so cool. There you go. Maybe she was in the Mouseketeers. You never know. Hey, Steve Burns. Good to see you, my friend. Always great to have Steve Burns here. And thank you so much, Steve, for everything you do for all of us coming here into the chat. All the great books you put out, all the great information you have on your website, newtraderu.com. and all the content that you put out over on Facebook and Twitter. I always appreciate reading all of Steve's posts. They're always very helpful. Steve says, this market action is all about the stimulus package here. Yeah, 100%. 100%. Markets just wants more money, right? That's what it is. It wants more stimulus. Hey, Frank, good to see you, bud. Frank says, hello, Greg and group. Hello, Frank. Good to see you, my friend. Hope you're having a good day. All right, well, let's get to it and start off and see what's happening here. Give me 1 second. All right, here are the Qs. So I did buy the Qs back here on the 30th of September at 277.80 with the 520 crossover. We moved up initially, took some profits. We came back down here. The price closed below both the 5 and the 20. These were the two moving averages that I used to get into the trade. This was a warning sign. I took half off here for a loss, but then had a nice leg up. Of course, every time it goes up a certain amount, I do phase out and phase out and phase out. Then I did sell half here when we closed halfway below. We closed below the previous day's low. Came down, then it bounced, took some more profits, bounced yesterday, took some profits, and I did hit another profit target here today at 286.99 when we had a little bounce up to here at 280, sold at 286.20. So for me right now, I'm just going to continue in this trade unless we get back down to break even. Hopefully we'll keep moving up, or at very least we have moves up that I can sell profits into before it goes back down, because we've had a lot of ups and downs and ups and downs and been higher and lower, but did hit one profit target there today. All right, SPY. Well, you know, yesterday I told you I was not thrilled about buying the SPY, but I'm glad I did. I do buy the SPY every day at the close. I hold it overnight. I take the overnight risk. I sell it first thing the next morning. This is based upon a long-term back-tested study from Liz Ann Saunders. She's at Bespoke Invest on Twitter. Since 1993, they tested two approaches. Approach one, buy the SPY at the open, hold it through the day, sell at the close. This approach, done every day since 1993, returned a negative 13.9% return. The opposite approach, this is the one I use, buy SPY at the close, hold it overnight or over the weekend, sell it the very first next opening. This gained a positive 634.2% return. So big difference between negative 13.9 and positive 634.2. Past performance is no guarantee of future results. Of course, we know that. It may never work again in the future, but I like to trade setups that have good back-tested results, like this one does. Blue line, buy the close, sell the next morning. Orange line, buy the open, sell the same day close. Not even close. Over time, all this has done has gone up and up and up. There are significant drawdowns with the approach, so if you're considering doing this approach, I would take the long view on this and use a small percentage of your capital, maybe like 5% of your capital, as far as how much of the SPY to buy and then sell it the next morning. So that being said, I did buy the SPY yesterday at the close at 342.01, and I sold it this morning 343.42. So had a nice overnight SPY trade there, well off of its highs, right back to about where I sold it. Profitable nonetheless. I also have a crossover trade in the SPY that I bought back here with the 1050 EMA crossover. I bought it here along with Brian at 333.82. It's had a nice, beautiful move up. Of course, I took a lot of profits here. Here, we had the first close below the previous day's low. I locked in half here. And then yesterday, I can't remember if I hit a profit target yesterday or not, but I definitely hit one today up here at 344.79. And again, I will just continue in this trade as long as the 10, the price, as long as either the price stays above both the 10 and the 50, the 10 stays above the 50, and in the worst case scenario, if it gets back to my break even, I will get out for break even, but it won't be break even because I've taken all these profits along the way. Okay. Okay, since I'm still on the SPY. All right, so Gary and Steve, they bought at the money puts yesterday, expiring October 23rd, 343 strike price, 375. And this was Steve's, right, at 342. So that's because the 1030 EMA crossover was happening in the VIX, which generally indicates volatility. So of course the market is up today, so I would imagine that those puts are underwater at the moment, but not as much underwater as they were when we were much higher. So I imagine those are a little bit of a loss still, but day's not over. Okay, VIX. Well, all right. I'll start here with my day trades. All right, I did buy the VIX here on the 5-minute when we came into the value zone. We went down, we came up, we made a lower high V2. I got in at 23.06, had a nice move up here. There was this big kind of expansion bar, came back down, rejected the 1ATR channel, so I got out at 23.23. Then I was just looking for a close below the previous day's low. It just moved sideways, didn't close below the previous day's low or do anything until over here. So I got in at 23.06. I got out of half at 23.18, and I got out of half at 23.23. Okay, let me see here. Yeah. Now, I did buy VIX calls yesterday right around in this area here. I bought that because of the 1030 crossover on the VIX index. So down a little bit on the day, but still nicely up on the trade. I bought the November 20 $22 calls for $2.91. So they are still in the money. All right. McDonald's. I had a short on McDonald's. Right here. As we rejected the third ATR channel, we got close up here to the 100-day moving average. I shorted here, intrabar at 228.21. It moved down nicely for me. Nicely. Here, it went under the 50 and over the 50. So I covered half here. I had to close above the previous day's high. So I shorted at 228.21. I covered half at 227.80. And I covered half at 227.50, and that was just the right time to get out because then it took off, and then it really took off. But now, of course, we've been selling. So that was a good day trade. Philip Morris. Well. Give me 1 second here. I got just the right bounce on Philip Morris, about the only bounce of the day. Here we have a low with red. We rally to green. We come back, make a lower low, no red to be found. We went under 30, over 30, and a V2, and we had a double bottom with a bullish divergence. I bought it here at 74.86. Moved up nicely. On this bar here, I went ahead and just took half because it was a big expansion bar. Whenever I'm in a day trade and I get a big, huge bar like that, I always take advantage of that to take some off. And then the next bar, we closed below the previous day's low. That was my exit. So I got in at 74.86. I got out of half at 75.15, and I got out of half at 75.23. And then lastly, Apple. I did take the 520 crossover here, happened in the value zone in a good spot. I bought at 116.91, moved up, had this big, huge bar up here. I took advantage to sell half at 111.18. Next bar went above 70, below 70. I got out of half of the half that I had left at 118.05. And then finally here we have a close below the previous day's low. So I got in at 116.91, got out of part at 117.96, 118.05, and 118.11. So anyway, I hope that all makes sense, but that was good. They were all profitable, and I am grateful for that. All right, and I think, let's take a look over here. I think that's it as far as my position. So good on the day, good green day. I'm grateful for that for sure. Gary says, market seems to be selling off a bit as no deal has been reached so far. Yes, that is true. Hey, Bob, good to see you. Frank says, for fun, I took the IBD stock of the day, CRSR at 22.84 with a protective stop. Well, let's see what that's at. CRSR. Hey, you're in the money. You bought at 22.84. It's at 23.35, up 16%. Wow, Frank, nice. Gary says VIX has gone positive on the day. Well, that's good for my calls. That's for sure, right? Let's take a look. VIX was never down all that much. I mean, it was down a little. Oh, well, here I have it negative 52 cents on the index. Maybe you were talking about the VXX, but that is down 11 cents. So maybe that's what we were talking about. Let's see. All right. Yarver Muster. Hey, how you doing? Good to see you, sir. Appreciate you being here. Why SPY and not the futures? Well, because this back test, Mr. Muster, the back test results that I use are for the SPY, which doesn't trade in the evening time. Of course, the ES does trade during the evening time, so I don't think you could use it using futures, because futures, I think there's only 1 hour that's down. So essentially what you're doing is you're taking advantage of the overnight, what the overnight futures traders are doing with the S&P. I hope that makes sense. Quad says, good afternoon, Greg and group. Hey, Quad, good to see you, buddy. Frank says, out at 2350. Okay, nice trade. Nice trade. Okay, well, let's start going through here and seeing what's going on. Glenn bought Amazon back at 29.61. It is 32.13. Is up a little bit, but the market sold off quite a lot here, so it is up a little bit, but nicely up on. I have this delay with my trading. I have orders that I made an hour ago that just come through. Finally, they update. It's annoying. So anyway, nice trade there. Up on the day, up on the trade. TTWO, Brian bought TTWO at 168.80. It is now 164.98. Glad he only bought a half a position. It is down on the day and down on the trade. Intel, Gary sold Intel puts down to $45. It's at 53.32, down quite a bit today, down 2.31%, but he's still nicely in the money. As long as it stays above $45 by November 20th, he will be able to keep all the premium. And I know he's nicely in the money already. All right, here we have Johan. Johan's had a nice trade here. Bought at 13.32. It is now at 14.17. So this has been a nice move here, up 5.86% for Johan. Very nice, Johan. RBA, Mark bought RBA back here at 60.61. That's Ritchie Brothers. Nicely up on the trade, and it is up a little bit on the day. PLTR. Oh, David bought PLTR at 950. Had such a nice big move up. Was still in the money yesterday, but down 2.72%. But maybe David has already gotten out. Hey, Johan, good to see you, bud. Nice trade on HA. AQN. Mark bought AQN at 15.29. It is at 15.49 up on the day, up on the trade. So very nice. EA. Brian bought a half a position. Luckily at 132.70. It is now 127.50, down 1.82% today and down on the trade as well. Google. Gary sold puts on Google down to $1,200. It's at 1563.90, up 1.91% today. So up nicely on the day for Gary, and he's doing very well on those puts as long as they don't close under $1,200. LVGO, Frank bought LVGO back here at 132.50, moved up, didn't like the price action, got out a half, still for a profit, kept the other half, and this is a little bit down today, 7 cents is all, but nicely up on the trade. Oh, CRM, Brian bought CRM at 251.20. It's at 256.49, is up 0.58% today and up on the trade. Kamal, ooh, big comeback for Kamal. This Facebook got down here to like 259. He bought it at 269. Today it actually went above 269. Right now it's 267.88, but up 2.48% today. So that's good. Match, Johan and Kamal, the dynamic duo, bought Match Group with this false breakout to the downside, V1. It is up about 3.34% on the trade. So very nice, guys. INSG, Quad, I have you in this. I hadn't heard from you. I don't know if you're in it still, but I had you in at 1038 back here on the 14th. It looks like it is down today, but I would imagine you would have gotten out. But update me on that. Oh, and lastly, Walmart. Brian got in at Walmart at 140.69. It is 144.12 It's up $1.17. It's up 0.872%. So it's up nicely on the day and nicely up on the trade. So what I'm glad to see is, everyone keeping their winners and not letting the losers get out of hand. Remember, I look at those losers as weeds in my garden. You want to keep your garden free of weeds so that your vegetables and your flowers and what else do you grow in a garden? Vegetable and flowers. So they can grow without getting suffocated by the weeds. And your account, the capital in your account can grow as long as you keep those little losses out of it. So I hope that makes sense. Yavar says, thanks a lot. You are welcome. Yeah, it doesn't work with futures. It doesn't work with futures. You have to take advantage of that time of the day where there's no trading. See, the reason, in my opinion, that works, Yavar, is that people don't like to take risk. People sell stuff before the end of the day because they don't want to take risk overnight. Well, you get paid for taking risk in the market. Most of the time, things are fine. And in the morning, nothing's happened or there's no bad news. People will start bidding up that price again. And that's where the difference is between where you buy it at the close and sell it in the open. Sometimes there's bad news and you get hammered. That's just how it goes. But you need that overnight time to pass by to take that risk. And that doesn't work with futures. Frank has a poem. Wait, let me copy this real quick first. Okay. Even a stock market whiz has to work with the market that is. That's how it works in the trading biz. We take what's before us and make our best call while facing a market that doesn't listen at all. Boy, that's the key. That is the key, that the market doesn't listen, doesn't care what we think, doesn't care what we want, impervious to what we want. Even a stock market whiz has to work with the market that is. That's how it works in the trading biz. We take what's before us and make our best call while facing a market that doesn't listen at all. Man, that sounds like a pretty daunting task, the way that Frank says it, but he's spot on with that, 100%. Okay, let me take a quick look here. Qs are doing fine. If it gets back to break even, I will get out. SPY, I'll be buying this overnight SPY trade again, of course, today. VIX, I've got the VIX calls. They're in the money. They expired November 20th, and I bought those because of the 1030 EMA cross on the VIX index. And then, oh, I forgot, as always, about Apple. Dang it. Sorry, Gary and Frank. Frank is in, oh, wait. No, I think Frank's out of, maybe I accidentally did this. Sorry. I know Gary's in at 116.31. And I know Frank was in at 111, but now I can't remember whether or not Frank cleared his position or not. Maybe, Frank, if you hear me, maybe you can let me know. Sorry about that. I always forget Apple because I always day trade it. There you go again. See, those are orders that I had put in, and the order goes through, but it stays in my order queue. It's really been difficult because I look at my order queue and I'm like, why do I have that? And I don't. It just takes a while for them to clear. All right. Gary, you're the one that sold yesterday at break even. Okay. That's right. And Frank must be in still at 111. Okay. That's right. We were talking about that. I was proud of you for being able to take, for you to be able to take a break-even trade. Now I remember. Yep, got you, Frank. Got you here at 111. Roger that. Roger that. Okay, what time do we have? 1:31. All right. So listen, before we start going down through the watch list, before I start looking for an end of day trade, keeping in mind my 3 requirements for any trade. Number 1, confluence, combination of indicators lining up, ideally on multiple time frames. Number 2, risk to reward ratio at least 2-to-1, meaning that if I'm going to risk $100 on a trade, I need to be able to make 200 or more based upon valid support below me where my stop is, and valid and likely resistance above me where my potential profit is, right? So 2-to-1 is my minimum, 3-to-1, 4-to-1's even better if you have it. And then number 3, I always have to keep in mind, how much account heat do I have? How many positions do I have? How correlated are my positions? Very, very important. I think people spend the least amount of time looking at their correlation. And that's one of the first things I try to look at. I just don't want to be correlated. I don't want to have 4 airline stocks. Makes no sense, right? Whatsoever. Maybe have some industrials, maybe have some healthcare, maybe have some tech, maybe have some gold or some silver or something outside, so that if there's a bad day in the market, maybe one of your positions will be up or won't get devastated like everything else. All right. So those are the 3 requirements. Before I do that, I want to talk about a little trader psychology. This is from our friend Ranger Trader. He's my friend, former student. He's on Twitter, Ranger_trader, ex-Army Ranger. And I tell you what, he's brought, I think, everything from his military career, the discipline, the learning, the precision into trading. And I'm really, really impressed with Jesse. And so let's see what Jesse has to say. Fear, hope, and greed, the fire triangle of the stock market. They should never be part of your plan. Traders who possess any of these 3 things as part of their strategy are punished daily by those who don't. Does that make sense? So there you go again. Here's the trifecta. Fear, hope, and greed is the fire triangle of the stock market. They should never be part of your plan. Traders who possess any of these 3 things as part of their strategy are punished daily by those who don't. Now, I'll put a little caveat in here. Look, we're all human. We all have fear, hope, and greed, right? So to not have any of this wouldn't be realistic. We all have fear, hope, and greed. The only difference is amateur traders react to the fear, hope, and greed. Professional traders have fear, hope, and greed, but they've been doing it long enough, they're professional enough to not let it affect their trading plan. See the difference? We all have fear, hope, and greed, but some people will let it overcome them, and they'll get in and they'll mess with their trading plan and do things they're not supposed to do. Professional traders who have a handle on this also have fear, hope, and greed, but they understand, they kind of transcend these emotions, and they understand if they let fear, hope, or greed make decisions in their trading, that it's not going to be a good outcome in the long run. So as always, just another way to say, please stick with your plan. Don't let your amplified emotions, either to the upside or the downside, compromise what your trading plan is. All right, does that make sense? And thanks, Jesse, very much for that. It's a great post. Arthur. Hey, Arthur, good to see you again. Hey, Greg, would you mind taking a look at TECK? It made a 520 EMA cross and could break out from a down channel. Sure, let's take a look. Well, yes, it does have. Let me take a look here. Yes, it does have a 520 crossover. I don't have my back tester handy, so I don't know whether or not TECK does back test positively when it does have a 520 crossover. you have a fractal over here. Here's a high with two lower highs to the left, two lower highs to the right. If you could break over that fractal, or in other words, break outside of that range, I think it would add a little more credibility to the trade. But however, again, I don't know whether or not if the 520 by itself would be valid if it backtests well, but I don't have that handy, so I don't know. Let's take a look at the weekly. Weekly has had support at the 1 ATR channel. It's right in the middle of the 1 ATR and the second ATR, kind of moving sideways, which is a good thing. A lot of times if you have sideways movement, that one of those crossovers will help you move into a trend position. But again, I don't know if the 520 backtest positively on this, but taking out the high of this trade here would also be good. So anyway, hope that helps. Keep in mind there is earnings coming up here on the 27th of the month. Gary says, Frank is holding for long term. Check. Got that. Yep. Johan says, DHT. Well, I really honestly don't see too much here that I would get excited about, Johan. I mean, yes, we did test this bottom today. We went below it and back over it. That's a good sign. It's a false breakout to the downside. You know, at first glance, you could look at this and think that it was a double bottom with the bullish divergence, but it's really not, because here you have a low with the deep MACD bars. Yes, we rallied to green, but we haven't come back down here to this low. So if we do, I think it would be better. I always like tests of previous bottoms. Earlier in the day, it was a V1, but if I looked at this trade, I would look at this as a false breakout to the downside and a failed V1 at this point. So I would not get too excited about this trade. Now, if it triggered a V1 towards the end of the day, that would be better. It would be better. I guess I'll put it that way. But when I look at this, I don't get really too excited about it. I would get excited if we came down and tested this low here, like the 488 level, and had a double bottom with the bullish divergence, and then had a V1 or a V2. So that's my take. Frank says, you know, Gary, as long as I'm not losing money, I will try to hold some stocks longer and trade a little less. At least that's my plan. Absolutely. Listen, I say this a lot, but as long as you're in the money on a trade, I'm not too fussed about what your approach is, your scaling out or your lack of scaling out or whatever you do. The only thing that's important is that if you are losing money, that's when you don't want to be complacent and patient. That's when you want to be proactive and get out. But as long as you're in the money on a stock that you like, you know, at some point you want to harvest a little bit, right? Whether it's, you know, at a high RSI reading or high ATR channel or something. But in general, regardless of how you trade, and there's lots of different ways to trade, the most important thing is when you have a loss, cut that loss short. Don't be patient with the loss. You know, human nature is many people, they're fearful when they have a gain and they're hopeful when they have a loss. That's the irony of trading. When you have a loss, you think to yourself, well, man, I mean, how much more can it go down? And you get hopeful. But when you have a profit, you get fearful. You're like, oh, man, I don't want to give back that profit. That's when you get fearful. But in reality, to be a good trader, to be a successful trader, you should do the opposite. You should be hopeful when you're in the money. You should be fearful when you're out of the money. And that's exactly what Frank's doing. He's being hopeful as long as he's in the money. Will it work for him every time? Not every time, but it's the right mindset to have. If you're in the money, be hopeful. If you have a current loss, that's when you should be fearful, not the other way around. Okay. Let's see what's happening over here. All right. Hey, listen, everybody, could you give me just about 30 seconds? I need to take care of something. It always seems to happen right around here. If you could just hang on for 30 seconds, I will hurry. Okay. Hey, Jatin, how you doing? Sir, wasn't Google a shakeout yesterday? What's your call on that? Google. So I did not have Google yesterday, but I believe what you're referring to yesterday was... Okay. Yeah, this was Steve's trade. Steve took Google with the 1030 crossover, SMA crossover. Yesterday when we had the big down volatility bar, that was, I believe, Steve's reason for getting out of the trade. Now, from a mechanical standpoint, the 10 is still above the 30. So if you were just following this, Jatin, from a mechanical standpoint, then yes, the 10 is still above the 30 and you would be in a trade. But, you know, Steve and I generally get into trades using the crossover, but then we become discretionary trades after that, meaning that we give ourselves the ability to not have to follow it to the letter if we get a big kind of volatile bar. And yesterday was a big volatile bar. And I'm pretty sure Steve did sell Google yesterday. And, you know, unfortunately it's up today, but that's, you know, that happens to all of us, right? We get out and then it just goes roaring up the next day. But, you know, that was an extremely volatile down bar yesterday. So that makes a lot of legitimate sense to me to have gotten out. Oh, a low volume fall. Oh, it's a very good point. That's a very good point, Jatin, for sure. Yes, we had a big day down yesterday, but you're right. The volume was quite anemic and the move up today is quite strong. So very good eye on that. You know, if you, now there you go again. So, you know, good time to point this out. You know, if you have something that goes down on low volume, just like Jatin said, something to consider. If something's going down on big volume but going up on light volume, that's concerning. If something goes down on low volume and goes up on higher volume like today, that is a good sign. So it's just kind of reading the tea leaves between. Okay. Boy, this Philip Morris, I want to point this out real quick. Look, earnings today, everybody, down 5.27%. Would you think that they had good earnings or had bad earnings? Do you think their guidance was good or was poor? They had good earnings, they had good guidance, and look what happened. Unbelievable, right? Just goes to show you, you never know what happens with earnings. Even if they're good, even if guidance is good, and their guidance was good, and their earnings were good. But for whatever reason, I mean, it sold off hard, very, very hard. So that's unfortunate. Okay, let's take a look here. Gold, getting very close to that 520 cross. The 5 is at 178.79. The 20 is at 178.94. I think if we have another move up tomorrow, we will have the crossover. So I will be waiting to buy this. I'm not going to buy it today. I'm going to just go ahead and wait for it. It is a higher low V1. Yep, it is. But I think I'm just going to wait for the confirmation of the 520 crossover tomorrow. Frank says, it's as if PM went up in smoke. Yeah, that's right. Philip Morris has a huge dividend, but it gave up a lot of the dividend today for sure. AMD, well, okay, so we were above the value zone. We came into the value zone. We held one day, made a new low. Look, we're right in the thick of the value zone. Let's look at the weekly. The weekly, I'd like it to come down right to that 1 ATR channel as support underneath on the week. But, you know, if we had a V1, if we had a valid V1 or V2 here in the next few days, I would take that. But earlier in the day, it did trigger a V1 when this close was above yesterday's close. But yesterday's bar is a little bit larger than 1 ATR channel. Not too much, but a little bit. But this is setting up for potentially a nice trade, but I'm not going to be buying it right now. Okay, Yelp. Yelp's not bad. It's a higher low V2. It's at a 47.07. Did it already reject the 50 RSI today? Yeah, it did. So here at the high, we got up to 50 RSI. That 50 RSI is like an invisible support, resistance level above. So I don't take V1s and V2s. I'll take it if it hasn't got to 50, but if it's already rejected the 50 like it has here, I'm just not going to take the trade. So I hope that makes sense. Facebook, false breakout to the downside and a V2. I kind of like this actually. The only thing that concerns me is that we've already rejected the 50-day moving average. Similar, like I just told you on the previous stock when it rejected the 50 RSI, I'm not going to buy it. If it rejects the 50-day moving average, also I'm not going to buy it. So let's see, the 50 currently is at 268.33. So I would consider buying Facebook if it can close above the 50-day moving average, which is 268.33, and right now it's 268.04. So I'll put that one on the watch list, or I'll put that over there to look at the end of the day. Lyft, it's a little bit of a V1, didn't reject the 30 RSI, anything like that, so I don't see anything on Lyft. MTZ, it's a V2, but we're at the 63 RSI. We're already up at the second ATR channel. That's just too high for me to buy anything. XLF did trigger a V2 earlier. No. I'd like to see it do something nice here around the 200-day moving average, but right here I would not be interested in buying it. TW, Trade Web Markets, it's a higher low V2, rejected the 1 ATR channel pretty substantially, also rejected halfway of see the big down move bar, 50% of that you're going to find resistance, and that's exactly what happened there. And that's essentially right where we're at right now as well. Just too high for me to buy. FAS is going to be very similar to XLF. Yep, exactly. But no, I don't see anything there. Walmart, no, I don't see anything there. We've sold off near the high, so that's not so great. Verizon, yes, it did go under 30 and then back over 30, and it did reject the 200-day moving average. Tomorrow is earnings, though, so I'm not going to take that. I don't know if they're in the morning or the afternoon. I don't like that it's down on an up day. But yes, it is under 30 and back over 30. It did reject the 200-day moving average. But on the other hand, it hasn't been able to get above that 100-day either. And earnings are coming, so nothing there. You know, I don't quite mind this other than there's only 83,000 shares traded. This is platinum, and you would expect that it would be going up with the rest of the metals. I do like that we gapped over the 200-day moving average. Makes it a higher low V2, although with a big gap, which I don't like so much. And let's see if it rejected the 50 RSI. Not quite, 49.20. But again, it's only 83,000 shares. It's not enough volume for me. I would rather just wait for the crossover on gold if and when it comes. Coca-Cola. We came down, we made a lower high. We have not washed out the previous low. It did gap, so I'm going to let that one go also. STZ, Constellation Brands. Earlier in the day, it was a false breakout to the downside in the V1, but I don't see anything that I'm interested in here. Sohu.com. Probably one of the better ones we've looked at. That is a valid V1. It is a false breakout to the downside. It is a rejection of the -1 ATR channel. Let me do some math on this real quick. How much time do we have? 7 minutes. And you know, if I like it on the daily, of course, I always want to go look at it on the weekly and see if I can get some confluences. If we look on the weekly here, well, we are back in the value zone. That's something. We have rejected the 10-week moving average. We still are above 50 RSI. Volume is quite strong today. 441,000 shares traded. Let me take a look real quick and see the bars. There's some bars that didn't have any trades whatsoever. It's not a bad trade, but I'm concerned. When I like to look at the daily volume, if it doesn't have movement on each bar of the day, it really concerns me. It really does. But you know, one of the better ones we've looked at. So Facebook looks like it is rejecting the 50 SMA, in which case I would not buy it. Yelp already rejected the 50 RSI, I believe. Yep. So that one's off the board. So unless we have a rally here into the close, and gold's not going to get there. At least I don't think. That kind of leaves Facebook at 268.88, but now it's 267.81. And SOHU, which is decent. It really is decent, but I think I'm just going to let it pass. I think I'm just going to let it pass. Okay. Dan says, yes, PM counterintuitive. Smokers will forego food before cigarettes. Yeah, that is true. That definitely is true. All right, so really the only thing I'm going to even kind of look at here for today is Facebook. And remember, you don't have to take a trade every day, everyone, right? I mean, I think one of the best postures that you can come into trading with is trying to be a devil's advocate and talk yourself out of a trade. I know it sounds kind of strange, but I think it's a good idea. And I've really been working on that a lot lately. And honestly, there's just nothing that really jumps out at me today that just says, oh man, I really need to buy. But remember, right? I already have the Qs in a swing trade, in a crossover trade. I already have the SPY in a crossover trade, right? I'm going to be buying the SPY overnight, so that adds risk as well. So, I've got positions already, so I'm not in a real big, huge rush. I definitely would have bought gold if it would have had the crossover, but it didn't quite get there. So it doesn't look like Facebook is going to get there either. So I think I'm just going to go be happy with what I had today, be happy with the 4-day trades that were positive, and just call it a green day and be happy with it and not just have to go rush into a new position, because I already have some, and I'll take the overnight SPY trade, and that's always a wild ride just by itself. And I have a little VIX on the side, right? I've got a little VIX on the side as a little bit of insurance. And like we were just talking about with Frank, and I mean, it's in the money. I'm going to be patient with it. If it was at a loss right now, I might have other thoughts, but I am patient with it right now because it is in the money. Frank says, my concern is that hair trigger market anxiety from earnings is infecting the charts, making the triggers less reliable. That's a good point. There is a time when volatility is so high that the triggers and the indicators lose their value. Right, Frank? Yep, that's true. All right, so it looks like we have about 30 seconds to go. I'm just going to be buying the overnight SPY trade, and that's it for today. Let's see what the last minute on the SPY brings us. Well, looks like it's going down. Okay, market is closed. So anyway, nice and green on the day. I'm happy for that for sure. Let's see here. Let's see, I bought SPY at 343.38. $343.38. All right. And that's it. That is it. So listen, if you have any new entries or exits for me today, this would be a good time to put them up on in the chat for me, and then I'll get them all accurate and updated up on the board. Just real quick, as always, just want to remind everybody that I do teach private one-on-one lessons in the evening time via Skype. I really do enjoy teaching. I think I do a good job with it. I've had really good results with my students. I think I teach a really good course. The course is 15 hours, 5 sessions. Each session is 3 hours, so it's kind of a lengthy one. But I have a lot of experience. I've been trading for over 25, almost 25 years now. I have studied one-on-one extensively with some really great traders, authors, my mentors, my coaches like Stephen Burns, Dr. Alexander Elder, Kerry Lavorne, Larry Williams. Each one of these gentlemen have different trading approaches. And that's what I wanted. I wanted to study with as many people so that I had tools so that I could trade in whatever kind of market we have. And that's essentially the course I teach. All the setups and all the wisdom and all the education that I received from my mentors and teachers, that encompasses the 15-hour course. I think one of the best things to learn is to have a lot of repetition, and one-on-one is the best. Answering, ask a lot of questions, get a lot of questions asked. I ask you a lot of questions. I really want to make sure when you're done with the course that you really do understand what I've taught you. And during the course, there's a lot of time where you have to prove that to me, because we go through chart after chart after chart after chart, take trades, run through the trades, win or loss. So anyway, if you're interested in taking the course with me, I know you'll be a better trader when you're done. It is $1,000, but I think it's well worth it for that money. I think it's I could charge a lot more for that. I think it's honestly way undervalued for what I charge, but that's fine, right? You get a good deal on it. You'll get a lot of education for that money, so I think it's worth every penny. So if you're interested, you can just send me an email. Email's in the description of the video. You can also send me a message on Twitter, and if you do, I'll reach out to you, or I'll reply and say, hey, how you doing? Thanks for saying hi. Let's set up a Skype call. Skype call is free. I will never ask you if you want to take the course in the Skype call. It's not a sales call whatsoever at all, I promise. It's just a good time for you to ask me questions about the course, and it's a good time for me to ask questions about you and what you're looking for a course and what your goals are and your trading challenges. And when we're done, I'll say thanks, nice talking to you. Think it over in the future. If you want to schedule the lessons, then you can do it. And then lastly, if you did like today's podcast, I would really appreciate it if you could hit the thumbs up button. It does help grow the channel, keep the channel around. And so if you like today's content, or if there's any part of it that was helpful for you, I would appreciate it if you could take just a half a second and hit the thumbs up button before you check out of here. Okay, so that takes care of business. Let's see. Gary says, I agree with Frank, but just feel that earnings this quarter are meaningless. Unless there is a stimulus, how can companies give guidance for the future? Well, Frank and Gary both make a good point there. There is a time here where earnings don't really matter anymore. It's going forward in the future, and the stimulus will have part of that. But I think both Frank and Gary are right. Quad says, thanks, Greg. Thumbs up as always. Hey, thanks, Quad. Hey, Quad, are you still in, is it INSG? Not sure. If you're still around, let me know. Kamal says, no trades today. Okay, good. Gary says, we knew not to expect much from earnings already. I don't know. Maybe I'm wrong. Just humble opinion. Hey, we've all got opinions, right, Gary? Sometimes we're right, sometimes we're wrong. Kamal says, thank you, Greg. Happy hiking. Thanks, Kamal. Appreciate that. Johan says, thanks, Greg and everyone. Thank you, Johan. Hope you're doing well, bud. Nice job on your HA trade today and on your match. Is it match.com? No. What's the one that you and Kamal have? Oh yeah, match.com. That's it. Nice. Very nice. Gary says, no new trades today. Thanks, Greg. Have a great day. Thanks, Gary. Appreciate that, bud. Really appreciate that. Thank you. Okay. Well. So we did sell off from the highs. I'm assuming no deal, no stimulus deal or anything. I haven't looked at Netflix earnings are out. Who was talking to me about Netflix the other day? Let's see, are they up or down? They are down 6.6%. Wow. Netflix down $31 after earnings, everybody. Down 6%. My gosh. So that puts it at about right here. Right now, that gap. Well, that's not going to help the Qs out in the morning, is it? Qs are down 42 cents. SPY's going to be down too. Not too much. VIX is up a little bit. Wow. Mark says, hey Greg, still holding Amazon, ANQ, RBA. I'm pretty sure I got you in all of those, Mark. Yep, I got you in here from 29.61. ANQ. Is it ANQ or AQN? Because I have AQN, Mark. And RBA. Yes, got you an RBA. Gary says, no new stimulus as of yet, but the day is not over. Mark says, sell signals require MACD negative and 520 SMA negative crossover. Gotcha. 10-4. Well, those are two pretty basic indicators that work well. Like I was saying, your entry signals don't have to, be kicked out of a computer that's been programmed for 11 years, right? I mean, there's some pretty simple indicators you can take. But again, regardless, it all gets back. Yeah, AQ1. Okay, that's what I have. It all gets back to buying with some kind of indication, putting the position sizing correctly, adjusting for volatility, taking the trade, and then if your indicator untriggers, whatever it is, whether it's MACD or cross under or RSI level or a moving average, whatever, get out. See, a lot of people that have issues with their ego, they don't want to take a loss. I remember somebody, it was a while back, they said, well, I'm not going to sell that. I won't want to take a loss. And I'm just thinking, are you crazy? Listen, the guy that's talking to you right now rode WorldCom and Enron down to 0. Pretty good, right? So when I come out and preach to you about things can go a lot lower than you think, that you would have never ever expected, that was me in my wonderful, intelligent 20s. But then again, a lot of people got burned on those trades. A lot of 50-year-olds with a lot of experience did as well. But I don't want anybody to go through that. You know what I was thinking, right? Oh, God damn it. It went down. Can't get any lower than this. Can't go any lower than this. Oh, yeah, it can. Right to 0. So I just don't want this to happen to anybody. So when I get up here and preach on my soapbox, if you feel my blood pressure rising and blood vessels throbbing in my forehead, like Greg is getting a little amped up, it's because I know of what I speak. In that regards, anyway. So now it's at $500, Netflix. So it is off a little bit, right about here, right at the -1 ATR channel. Let's see if that lines up with something on the weekly. That's going to be a big bar down. I would bet you we go down to like 448. That's just my guess. I could be wrong. Dan says, this morning I had a 26-cent per share day trade loss, so I'm happy with it. On Netflix, Dan? I'm thinking it was on Netflix if you were happy with the loss. And now it's down, what did we just say? 25 bucks? Yeah. I'm reading a headline here. It says, Pelosi says Dems and White House are moving closer to a stimulus deal. Downplays Tuesday's deadline. All right, well, we'll see. We'll see. That would almost certainly be good for stocks. Stock prices tomorrow. All right. So, on Apple, I took a bad setup. Dan, I don't know if you can explain what your setup was, but what was your setup? And what time frame was it on? Was it on 5 minute, hour? I don't know if you even have time to, but less than optimal setup. Can you explain the setup to me, the time frame, and maybe we'll take a look and see what it looked like? I don't know if you have time, but if you do, great. If not, no problem. I'd like to get into the mind of Dan and look at the trade that you took. Okay. On the 5 minute after the first drop, let me look for the details. All right. So let's go back to the opening. $4.25 is what you're saying, Mark? What did I say? Oh, okay. I said about 450. I was looking at the weekly and imagining that it will maybe go down to the -1 ATR channel, which is about 450, and you're saying 425, which is just here slightly over the 50-day. So between you and I, somewhere in about that area, right, Mark? And if we go over to the monthly, yeah, a lot of support on the month at the 5 and the 10 and the 1 ATR channel over here. We'd have a bit of a pullback here from a Fibonacci standpoint. Let's see where that lines up. Yeah, right about the 38.2 retracement. Yeah, that makes sense to me. I guess we'll find out, huh? If we really believe in what we said, we'd short it here, right? Okay, so Dan entered at 116.40 or 116.64. Okay, 116.64 is right about here. Sold 116.38, and you said it was on the first drop. In this area here, Dan, oh, at 10:46. I don't know what time zone you're in. 10:46 a.m. And what time zone are you in, Dan? So I can, because mine are to my time zone. East. So that's 8:46. So right about here is what I'm seeing. And that makes sense. The price was there at 1664. Did you take that V1 that untriggered possibly? Florida. Gotcha. Well, I'm glad that you said that it was a less than optimal setup. You know, let's everybody try to be patient. Wait for those really good setups. Just, you know, put your hands behind your back, sit on them, whatever you have to do, right? But at the end of the day, trading less, you're likely to make more money. It's just about patience. It's just sitting back and having patience. And we could all use a little bit more patience, right? Just like Guns N' Roses said, you have to have a little patience. But anyway, I'm glad you're aware of it, that you know, wasn't really an optimum setup. So let's wait for those optimal setups, Dan. Yeah? All right. Well, listen, everybody. It's been fun. I appreciate you coming. I hope something in this podcast was helpful for you today. If it was, do me a favor, hit the thumbs up button. That would be fantastic. But before I let you go, let me just remind everybody, please go out and try to do something nice for somebody today. Just a smile, a wave, a hello. Be pleasant, give them a hand, help them out, something. If everybody were to do that every day, it would make the world a whole lot better place. And, you know, maybe you could just start with us doing it every day, right? Maybe it will spread. You never know, right? Couldn't hurt. And also, if you could try to do something nice for an animal today, I can tell you I've been around animals my entire life. They are very appreciative when someone does something kind for them. I promise you, I know this. So, you know, they're living creatures with feelings just like us humans. So if we could just do something nice for a human each day, one nice thing for an animal each day, that would just be fantastic. Jackson says Zoom can be a good setup at 520. Stock coming down at low volumes. Okay, let's take a look. Yeah, we didn't have too much volume here. So, Jackson, the way that I look at this, you know, the way that I look at all trading doesn't mean it's the only way to do it, right? It's just my personal, but here, this green line, this is considered the value zone. Anything over the green line is above value. Coming back to value, anywhere in the value zone is a more kind of a holistic place to buy. So if it were me, I would wait for Zoom to come back down into the value zone, show us that it is going to stop going down by having some sidewards motion, and then look for a V1 or V2 trigger. You know, this is above value, this is in value. You're always best to buy, waiting to buy in value and then selling above value. You can see in hindsight here, buying above value, well, here and here certainly would have cost you. Right? It's better to wait to poke your head at the very least. If you don't want to wait for a trigger and you just want to get into something, just the fact of, hey, I like Zoom, I want to get in Zoom, wait for it to come back into the value zone somehow. You'll get a better price, you'll have a better risk to reward, and you're buying at value, selling above value. That's the key. Buy under value, sell at value, or wait for it to come back into value and sell back when it's overvalued. That's how you make money. That's how businesses, you buy at a lower price, sell at a higher price, right? And Stan gives a peace sign. Hey, thanks, brother. Appreciate that. Okay, everybody. Well, I'm going to go for my walk and take care of that. Do some shoulder exercises. I'm working on a PowerPoint for some of my lessons right now. So I got to keep going on that, as difficult as that is. But anyway, good day today. I'm grateful for that. Hope you guys all had a good day. And hopefully we'll see you tomorrow during the last hour of the market. Okay? Take care now. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity.